Hi, welcome to the market alert for Tuesday the 22nd of September 2015. Starting off in the 5-minute chart for yesterday, let's just have a look at the pre-market session. The market was fairly quiet in the pre-market. The market moving slightly lower, then reversing and moving to the upside all the way through the main part. So the sort of 6 till 10, the market putting in 3 sells, the market failing to actually move lower, and then the market reversing and moving to the upside. These 5 black triangles here are during the quiet time in the morning session, and then you see the market then moving higher just before the main session. At the moment I'm not trading the morning session because the markets are not showing enough volatility on the overnight market, which is an interesting point actually, because if you have a look at the Shanghai index at the moment, you can see the market stayed sideways now for the last half an hour or so, in fact over an hour. And this is very, very strange, and the market did this yesterday as well. And the reason for this, from what I can gather from Zero Hedge, is that they're still pumping money into this market and devaluing the yuan. So that's the reason behind these sideways moves. Unless the PBOC are actually doing something, pumping money into the market or devaluing the yuan, the market is basically levitating, and that's precisely what we're seeing here. So again, really the calm before the next storm, which is going to come. There's no doubts about that. There is no upside, certainly no upside, genuine upside in any of these markets at the moment. We'll look at that in more detail in just a moment. So going back to yesterday's pre-market session, you see the market moving up, and it moved up over 150 points, 200 points. And then in the afternoon session, a bit of a mixed signal to begin with. You'll notice that we're getting triple X's and PTPs now. And the reason for this is the volatility has dropped off. So we don't get the big swings from psychological levels to psychological levels. And this is generating the PTIs and the triple X's, which are for sort of low volatility markets. So I had this one here at, let me just mark it up for you first. I think it's a triple X there. It's just slightly hidden behind the PTI. You can see there that this appeared at 15:15, just after the Fed Lockhart had actually spoken, and then the market reversed and moved higher. So we had a 20-point loss on that one, which was switched then to the upside, and we see the market just trading through the psychological level of 16,550 and then failing to move any higher. Now those observant amongst you will notice that any up move in this market has been on average volume and low volume. So immediately you should be alerted to the fact that there's absolutely no buying, no green bars as this market's moving higher. This is PPT levitation, the plunge protection team levitation as it's now known. And then eventually the market succumbs, and we have a potential sell signal here just before we go into the afternoon quiet session. And we see the market moving down to the first one. We then see the market closing below this immediately, and then down to the 16,450 level, which from this high down to this support here is 97 points. So a nice move to the downside there. The market continues to move another 50 points before it finds support, but we've taken profits in the quiet session, and these 2 signals ignored, as is this one. And then we get to the evening session, where we've seen as a new pattern in the market. Again, the market's changing again, and I'll just come on to that in a second. But here we see that first part of the change, where the market isn't allowed to finish on the lows at the moment. If you go back and look at most days for the last week and a half, the market is rallying in the evening session to finish on or near the highs of the day. Pure manipulation. No doubts about that at all. So here you see the market moving higher, putting in another trade, and again closing above the psychological level there to drive higher, with actually some buying coming into the market there. That's the pros selling on the rally, and then you see the sell signal coming in there. So again, another few points in this trade. I'll just show you the peak. Of course, is 63 points. There's no way you would have picked that up. But trailing the stop, if we just go to trade markup and the 50% trailing under the rising lows, you will see, if I just remove the check mark out of there so that it doesn't drop off the screen, to 16,516 from 16,437 there. So again, a few more profits to be had off the table there as well. So in the daily charts, let's have a quick look and see what's happening. We're showing some buying here, but that's only because the volume in the previous bar was low. This is not really genuine buying at all. It may be some shorts that were squeezed out of their positions yesterday as well to move the market higher, but certainly the market is looking slightly weaker on the overnight. The short side is definitely the better side, as you saw yesterday, 97 points in the one trade just after 15 minutes past 3 there. But again, be warned, the PPT are out and about moving the markets. In news, if I just get rid of all of this at the top, we've got 3 p.m, nothing today. Lockhart speaking again at 11:30 p.m, and of course the markets will be closed by then. And finally, in the implied volatility, we've already looked at Shanghai. It's up 0.9. Again, don't be surprised if this is being levitated by the People's Bank of China. I know they were very active yesterday, according to Zero Hedge. And implied volatility 17%, dropping sharply, which is very interesting given that we had a bit of a sharp downside move at 3 p.m. So again, something's going on here, that they're trying to bring the options volatility down so they can turn it around and then give them plenty of scope for moving the market to the downside and making a lot of money on low volatility options as well. That's what's going on in this picture here. So pulling back on the implied volatility, ready for the next move to the downside. Right, that's it from me. I will see you in tomorrow's edition. And just to summarize, at the moment the pre-market session is a bit hit and miss. We need a bit more volatility for that, but things have settled down in the main trading session at the moment as well. So an increase in volatility really required to trade the morning sessions, and of course now I've said that, it's likely to be quite volatile this morning. Again, probably advise you just trade it on paper for a few days just to see how things pan out with it, but at the moment it just doesn't seem to have enough momentum behind it to cover the widening of the 3-point spread and trading between the two psychological levels. But make no bones about it, it's going to return, and sooner rather than later as well. Right, that's it from me. Speak to you tomorrow.